Hello, everyone, again. So I thought that we should do a video this month on how to lower your mortgage payment. Okay, everyone wants to know that, I'm sure. Just if you have a mortgage, etc. And if you don't, you want to have one day, you want to know these things ahead of time. So there are 5 factors to a mortgage payment. Number one, principal. That's going to basically be your sales price divided by 360 payments if you have 30 years. That's pretty much set. Interest, that's going to be whatever the mortgage rate is, okay? And then we have taxes. That can be relative as well, based on whether your previous owner were contesting them. If it's pre-existing home, they were contesting the taxes, they may not have gotten as high as they could have gotten. And then for insurance, it's going to be your mortgage insurance. So that's going to be based on credit, based on the level of coverage that you're requesting, just based on where you live, and if it's a pre-existing home, if there have been any damage in the past. So that'll be that. Um, Hey, excuse me. All right, I'm back. And then the last segment is going to be mortgage insurance premium. So that's an insurance that the lender puts on the loan itself to insure themselves. Let's say you did a conventional loan and it was less than 20%, then it's going to be mortgage insurance premium on there. The FHA is always insurance premium, no matter how much you paid into it. So if you have an FHA loan, you want to go ahead and convert over to conventional once you're getting closer to 20% or whenever you can. It's harder to get a conventional loan, but if you can, you want to do that because you can knock off PMI once you get about 20% into that loan with conventional, and then you probably take out 150 or 200, 300 off your payment, which is great. Start putting that towards your principal or college fund, whatever you need it towards, but it's a great amount of money to chunk off of your expenses from the month. So there we go there. Now, how can you save? That's what we want to know, right? So the principal is set. That is what it is. The interest, you can save on that one. Let's say that you want to refinance, okay? It has to make sense. They're thinking next year rates will go down, but we don't know how significantly to where it will make sense to refi because there are fees associated with refinancing as well. So I would say if you have any interest in that, maybe early next quarter around that time, let's just monitor the market. I'm monitoring with you. I'm a messenger. So I can't really for sure say what's going to be, but we can predict based on historical data. So interest, you possibly could refinance if your rate's high. If your rate's like 3%, be at peace. You're going very good. If you got in during COVID, you have some of the best rates that are going to be around. Okay. But the rate's not everything. If you love another home and you have to pay 1 or 2% more, then just make extra payments to overcome the rate. But love the home that you're in. Okay. That's what you go to work for. You're worth that. All right. So that. Number three, taxes. So with taxes, that depends as well. So I want you to reach out to me if you're interested in knowing the values of your neighborhood homes that are comparable next spring or whenever your tax bill would come. Reach out to me before, like a month or two before you have to contest them. There's a deadline to contest your taxes. So reach out to me and let me run some comps for you and give you some alternative solutions on how you can potentially contest your taxes if they're coming up higher than market value. I've been seeing that lately. If they're lower than market value, but you don't want to say anything. But if they're higher than the market value, you want to contest that. So you have tax value and market value. Tax is what they assess your taxes on, your tax appraisal. You want that value to be low, your tax value. Your market value, you want that and it's time to sell. You want it to be high so you can make the money off of that. But your tax value, you would like that to be low. Okay. So any questions, just give me a call. It's okay. We do this all the time. And then insurance. So that last part is insurance, your homeowner's insurance. Well, almost the last part. That one is based on credit, level of coverage you want, like we mentioned. So with your homeowner's insurance, you actually can shop around. Just call me, reach out to me, and you can shop around. I can refer you to someone that can shop for you and give you great coverage compared with what you have now. And you could probably save 500 a year, or save, some people can probably save 1,000 a year. The newer your home, typically, the lower your homeowner's insurance is. Okay. The more risk involved, if it's in a flood zone, etc., like that, your rate will be higher. But as far as the newer, the better for the homeowner's insurance rate. Okay, guys. So reach out to me. If you're paying more than 2,000 and you have a new home, newish home, please give me a call. And then the mortgage insurance. I can't so much change that part. The last part, that's unless you are 20% into your conventional loan, then you can go ahead and have that knocked off. And the company, your mortgage company, should do it right away. But if not, you want to stay on top of that, because that's a good pretty penny to put, excuse me, to put back into your pocket. So anyway, any questions about that, just give me a call, 682-348-4128. But there are ways to save money, and I just like to see people putting their money into wise investments, which could just be back into their principal. And we already talked previous months about how you can, one extra payment take 6 years off, two extra payments. Well, it depends on your loan amount, but generally speaking, a home that's maybe 350, one payment off, one extra payment, 6 years off, two extra payments, maybe 11 years off. Three extra payments could take off 15 about. So just keep in mind that there are ways to save money, and I'm on your side. I want to see you save money. So, by God's grace, I am getting out of debt myself. So blessings to you all, and take care. Bye.